Well, this
Thank you for
market
having me.
moving ever so slightly over the past week. What are you making of the activity we're seeing over on that end?
Well, I think if the Kenyan capital markets were a catwalk, all the attention is on the latest model, and that model being the bond market. And I think what you've seen is a lot of liquidity move in that direction, and that's left us a little bit illiquid and a little bit at the bottom of the range. And that's why we're seeing a sort of defensive type of trading going on. And layer on top of that this diplomatic spat. I think that's made people a little bit more wary. But overall, if you've got a medium-term perspective, stocks are extremely cheap, Alishia.
Well, attempts are being made at restoring confidence in the meantime. I mean, just last week, we heard the finance minister say that Kenya will pay out roughly $4 million to investors who lost money at the collapse of stock brokerages last year. What's the market made of that news, considering that the law allows for a maximum payout of 50,000 shillings?
Well, I think a lot of these stockbrokers that actually collapsed last year were retail-focused stockbrokers. And, you know, there was a retail shareholders revolution in Kenya. We've got now nearly 2 million shareholders. It's a real outlier in sub-Saharan Africa. And I think this was the best deal that could be cut in the circumstances. It tried to assuage losses at the lowest end of the pyramid. And I think in that regard, the finance minister did well. I don't think anyone would have appreciated a complete payout to everybody, because it just wouldn't have made any sense.
Do you see this necessarily translating to somewhat of a rebound in the equities space? Because, of course, we've also seen stockbrokers publish half-year financial results for the first time this year.
Yes, we were getting a lot more transparency, and I think that's the way of the world, and I think it makes a lot more sense to be going in that direction. So I thoroughly approve of that. But at the end of the day, as an investor, you do have an obligation as an investor to take care of your own money and to place it with those institutions you feel are strong. So we're going to see much more granularity, much more investor awareness about who are the stronger stockbrokers and the weaker ones. And I think, you know, capitalism is Darwinian. You cull the losers, you reward the winners, and this is a process that's being brought to bear here as well.
Well, as you mentioned, a lot of the attention has been diverted to the fixed income space. I mean, it's been a hive of activity in the bond markets, not only with Kenyan, but Shell Africa as well. Both of those companies announcing extreme successes. But on the equity front, we've heard that Kenyan private equity firm TransCentury is selling shares over the counter at between 48 and 50 shillings per share, and has plans to list as well. How's the market reacted to that news?
Well, it's been a little bit under the radar so far, you know, as you said, and I think the market has not had an opportunity to look at that as yet. They've been doing it, I think, on an under the radar basis. I think it's a positive development. You know, it was a small coterie of folk. I think they're trying to extend that opportunity to more people. And, you know, they do have large slices of real estate across the economy. And it makes a lot of sense, I think, especially in the energy sector and in some other sectors. So I think it will be well received, because we have not had that much equity this year, if any.
So when it comes to TransCentury's investment case, investment merit, is it solely based on the fact that this is a diverse operation?
Well, they have a number of assets. The first asset that they purchased, which brought them to the fore, was East African Cables. They bought that off Mr. Mirali, and they took it to great heights. They've now well positioned in the energy sector. They've got a number of assets, and I think the thinking behind their thinking is that they need to leverage these assets more aggressively, otherwise they'll get a little bit left behind. And from the investor case, I think there's a sense that, you know, this is a quasi-unit trust. You're getting proven management who are very much on the inside, and you're having an opportunity to play to the upside. Private equity returns across our continent, Alishia, have been predominantly stratospheric. I mean, I was looking at some numbers, and our all-in returns have been averaging something like 31% over the last 5 years. That's off the charts. So I think investors will warm to this particular issue as we go forward. But they have been doing it they've been doing it rather slowly. They haven't put it in the press as such.
Talking about warming up, let's take a look at Kenya Airways. It's been on the making headlines over in Kenya. I mean, it seems to be optimistic about the way forward, given the fact that they're seeing tourism picking up, but that mainly out of Europe. And considering that most of the airline's revenue comes from African operations, just how optimistic are you about Kenya Airways growth moving forward?
I think the medium-term case for Kenya Airways is extremely strong. They have this incredible inter-Africa network, and you and I have flown around Africa. If you fly on KQ, these flights are not cheap on a per-kilometer basis. They're extremely expensive. And that is the real valuable real estate, I think, in their franchise. And, and I think that's what they've got to work at. But in the last 18 months, they've overhedged their fuel position right at the highs, and those hedges have not come off. So I still think they're buying crude at between $100 and $110 per barrel, and this is continuing to impact the bottom line. When these hedges roll off is the moment that Kenya Airways' share price will start to recover, and recover sharply.
But then we hit the next stumbling block here, Alykhan, because lack of funding for new investments seems to be that next big stumbling block on the horizon.
Yes, I think what we're seeing is that is definitely a hurdle for many countries, Kenya being one of them. And I think that's why there's so much attention on the local bond market, because there is a sense that there is cash to be mobilized at the local bond market. And once you mobilize that, you will be able to attract international money on a matching basis. And I suspect that's the way forward for a lot of corporates. They've got to put some money on the table to play. The way to mobilize it is domestically, and then you go in and look for international money. But to go and look for international money right off the bat is, I think, a very long shot.